What's going on, everyone? This is Ryan Adams. I'm a realtor out in Oahu, Hawaii. I'm a 14-year Army veteran. Today, we're going to be talking to you about the VA home loan. We're going to give you all the details about the VA home loan. So, if you've never used it before, or if you're looking to use it again, it's a lifelong benefit that you have. This video should be able to provide you some sort of education. And if you're looking for more answers, just shoot us a DM and we'll talk to you a little more about the power of the VA home loan. Today I've got Leeroy Kusto. He's my buddy out in Killeen, Texas. He services Fort Hood, or is it still called Fort Cavazos?
Ford
But yeah, Leroy,
Hood.
why don't you tell him a little bit about yourself and the area that you serve?
Yeah, man. Thank you, Ryan. It's good to be here. Thank you for having me today. My name is Leroy. I am a 15-year veteran. I was in the Army. I am here in Fort Hood. My wife is still in the military, in the Army. She's retiring next year. So we PCSed here last year, and I service the entire Central Texas from Austin all the way up to somewhere around San Antonio, around San Antonio as well. So yeah, I'm excited to get through this and then share our experiences regarding this powerful tool that we got, VA loan.
And for everybody out there that doesn't know me, I'm a realtor in Oahu. I've been a realtor here for 4 years, primarily servicing VA home loan users and sellers, of course, buyers and sellers. And, we're in Texas and Oahu, but if you have questions, you're trying to find somebody who's good and knows the VA home loan as well as we do, or close to as well as we do, definitely shoot us a message. Let us know. We'll help connect you with the right professional in whatever market you're looking at, whether it's Florida, Washington, wherever you're at in the U.S. The VA home loan is only good in the U.S. So if you're international, sorry, unfortunately, you can't use it. But if you're here in the U.S., feel free to reach out to us. We got you covered. We'll hook you up with somebody that's pretty good in your local area.
That's the crazy thing about this network we got. We are we're in all 50 states now.
Yeah. Yep.
Yeah.
The EXP military network's all 50 states. We got everybody. We got a huge network. We can get you connected pretty much anywhere, even states like California, you've got 3, 4, 5 different major markets. We've got people that we can reach out to just about anywhere. So definitely a broad network. It's very military centric and it's focused on servicing you and providing you the value and the knowledge that you need to make a smart decision when you're purchasing a home using the VA home loan, or if you're selling a home and you need to leverage different strategies that we're going to talk about a little bit about in this video as we go on. But the first thing we want to talk about is what exactly is the VA loan. So if you're a first time VA home loan user and you're listening to this video right now, you're probably like, I don't really know, like I'm tuning in so that I can hear about it. If you're not a first time user, you probably know a little bit about it. So we're going to rehash that real quick. Leroy, can you give them the rundown? What is the VA loan? What's the big benefits of it?
Yeah, VA loan is one of the benefits for service members and veterans alike. I think this is a huge leg up in terms of home ownership in America. It helps because, you know, when I was in the military, we don't have a lot of money just sitting around, and a lot of the loan products that people use to purchase homes requires a down payment. And one of the most unique things about VA loan, I think everyone now has an understanding on it, is that it doesn't require any down payment on it. So zero down payment type loans, which, like I said, it really helps with a lot of service members that don't have a lot of money just sitting around in the bank, right? So that's one of the biggest things that I think is unique about the VA loan. Also, a lot of lenders talk about there's no PMI, but a lot of soldiers that come to me don't understand what the PMI is. So can you kind of like walk them through what PMI is?
Yeah, for sure. So PMI, that's what it stands for, is private mortgage insurance. So, you as a VA home loan user, you don't have private mortgage insurance. Basically what that is when a conventional buyer comes in with, less than 20% down, they're basically buying additional insurance in case they were to default on the loan. So that insurance is going to come with a cost, right? However much it is per month, that's going to be extra that's tacked onto your mortgage. But you as a VA home loan user, you're not responsible for PMI. You don't have to pay PMI. So that lowers your monthly debt load when you're using that zero down VA loan. And why can we do that, right? That's always the question. Why is the VA loan able to do that? And the answer is this: the VA loan is backed 25% by the Department of Veterans Affairs. We don't want to get that confused with you being given a 25% down payment. I've gotten that before. It's one of the myths that people that don't know about the VA loan kind of think, right? Like, I wish I had 25% of my down payment given to me. That'd be great. But it's not that. You're not being given a 25% down payment. What you are being given is a guarantee by the VA. Really, it's the lender being given a guarantee by the VA that if you were to default on the loan, they're going to back it, which is driven by the VA funding fee. So, Leroy, I mean, you've paid the VA funding fee, right? Like, what was your experience with that?
VA funding fee that at the time was 2.3% of the purchase price. I think it gone down a little bit, no?
Yeah.
Don't quote me on that, but 2.3% of the purchase price at the time, let's say you're buying $250,000 home, 2.3% of that is your VA funding fee. Now, if you're a veteran and you have at least 10% or more on your VA rating, then that doesn't apply to you. You don't have to pay that VA funding fee. But if you're a service member still serving in the military, yes, you pay that funding fee because that is how they fund the VA loan. And also with the funding fee, it can be added on top of the loan. So you don't have to pay it like right up front. Certain things that each lender, like there's different lenders that can do that. That's why it's important. Just as it's important for you to shop around for a realtor, it's also important for you to shop around for lenders as well, because some might have you pay it up front and some are able to put it on top of the loan.
Yeah, and that really boils down to the experience of the lender, right? And that's why it's important get linked in with the right people first, with the right experience. We'll kind of talk a little bit later about some questions to ask the realtor when you're going through the process and you're starting the process, but that lender can make all the difference. And they're going to tell you all the different ways according to the VA guidelines, specifically the VA guidelines, how you can use the loan. So tacking that the funding fee on top of the loan into and adding it into the loan, that's something that some lenders might not know. Conventional heavy lenders, maybe like investor lenders, whatever the case, they don't always know that. But a VA lender knows that, and the different things you can do with seller credits, which we'll talk about later. VA lenders can tell you that, and making sure that you get aligned with a good VA lender, not just the one that sounds like the VA bank. There's certain banks out there that sound like they're affiliated, and certain lenders that sound like they're affiliated with the military, but you really want to look for the person. Don't get fooled by the name. Look for the person with the reputation. And you can
Yeah.
typically piggyback on a good VA lender, or sorry, a VA realtor, to help get you to that right lender. So, for me, I always have 3, 4, 5 different solid recommendation of lenders that I can send you to. If your personality's one way or another, I've always got the top VA lenders kind of on standby, right? Like, that are willing to help because they want to help service members. And, most of them are some way, some shape or form VA affiliated, whether they're, they've got family in the military or their military spouse or prior military themselves. They've got the buy-in and they've got, the passion to serve the community. So that's kind of, that's what I look for, at least when I'm going
Yeah.
into new markets. But
No, that I think that, yeah, like you said, it's super important to check for those things. Now, one thing that we didn't cover, I think, well, I want to go ahead and talk about it a little bit more, is the no credit requirement by the VA. I mean, a lot of soldiers come to me and say, I have a credit score of 500 and I know that the VA doesn't require any, credit limit, which is true. That is a true statement. It doesn't require any, you know, credit score limit, but the people or the institution, the lender, the bank, or whatever loan institution you're going to use your VA loan with, they have a requirement. Most of them have a requirement of at least 620 or above. There are lenders, like I said, like you said earlier, there's different lenders who have been doing this for a very long time and they're affiliated with the military. They served as well, so they know that that's not a requirement, and they have the businesses or they have the connections that helps those soldiers. Okay, you have less than 580, will help you. You know, some lenders, when they do help you with that with a bad credit score, they then charge you extra interest rate. Let's say the prevailing interest rate is at 6%, they'll charge you 2 extra point there. So then you're paying 8% on said loan. And at the end of that loan, you end up paying 3, 4 times the amount of the loan. So it, like you said, alluding to what you said earlier, is super important to check those things as far as lenders and realtors. Do they understand this? Is this a good thing for me?
Yeah.
Sorry, I didn't mean to go off
Dude,
of that.
you're good, dude. So when you're all looking and you're going to talk to the different real estate professionals in the market that you're moving to or that you're buying in, when you start talking to that lender, specifically reference and ask them about their overlays if that's a concern. The
There you go.
overlays are all those different things that they tack on top of the VA loan guidelines that say, hey, we're going to give you this loan based on this, right? So, think of it like if you ever did any sort of map reading, right? Or any sort of, you know, manual map stuff. I know in some of the schools I did, we were doing all those overlays, right? The map was the
And
map.
yeah,
That was plain. And then you take that transparent paper, you take that overlay paper, you're slapping it on. You got the enemy sit tab, you got the task organization, you got all the stuff. That's exactly what it is, right? Like just put it together in your brain and that's what you got. But to get a little more personal, I want to get a personal story, a couple personal stories from you, Leroy, and I'll share a little bit about mine. But when was the first time you used your VA loan personally?
oh, wow. You gonna date me, dude?
Thinking back,
The first time, how was it?
when
I
was it?
gotta tell you, when was it?
I
I
want to
think when
date
I
you.
got, yeah, I got out. I got out and I used it, but it
Nice.
was
Okay.
it was not the best experience. But like you said, it's important to look for those guys and gals that are in the business and have done it for a long time, and they understand, and they walk you through the process, because the process was not the best, say the least. 2021,
Okay.
2021.
20. Damn. Okay. That was a good time. That was a good time to use it too. Okay. So for me, it was shoot. I was a fresh lieutenant. I was just out of
You
Ranger School. 2000.
you bought while you was in, so
Yep. Three times. Three times while I was in.
you see that's the difference. I had
Yeah.
when
You
I
know,
was 15 years, never used it. 15 years, bro, I did not use it.
dude, it's just all about being surrounded by the right people. And I think like everything in life, if you're surrounded by the right people, I just got lucky, right? Like I didn't know anything about the VA loan, and I'm in Ranger School in a patrol base, and some major that I was going to be stationed with later on, like not like station with, like I wasn't the same unit as him or anything, but he was 82nd, I was going to the 82nd, and he was just telling me the story. He's like, you have to use the VA home loan everywhere you go. He didn't make it an option. He said like, you have to use it. Go use it. Don't not use it. I had no idea. I just listened to him. I'm like, all right, Roger that. Yes, sir. Cool.
I'll go do it,
That's what
bro.
I did. Like, all right, cool. I reached out to a friend of mine who I knew his mom was a realtor in New Jersey. And I was like, hey, do you know anybody that can help me in North Carolina? And she reached out, found somebody for me, and ended up getting myself a nice little new construction spot in Fayetteville. It was off
Bro,
Rayford Road.
dude.
Yeah. Dude, it was dope. I wish I kept the house. I mean, everything works out. Everything happens for a reason. So, we've compiled since then. But, that was,
Dang, dude. See,
yeah,
like you said, man, it's all about the people you surround yourself with. It's had I surrounded myself. I mean, you know what? It was also being scared too. I was enlisted. You see, like people, oh yeah, I used my VA loan, but you're just so skeptic and you didn't know, like, what is that? You know?
yeah. Dude, I just went in blind too, like knowing what I know now. It was just blind trust, right? Like, and I don't recommend that for anybody. I don't recommend blind trust. We want to educate you. We want to give you all of the different
That's
things.
why we're here.
But like, I didn't go in thinking, oh, how much is this going to rent for on the back end? I just went in saying, oh, cool, I'm going to buy this house. I'm going to rent it out. I didn't I had no idea. And like, I don't think the information was quite as readily available on Google. And obviously ChatGPT wasn't a thing yet in 2015. there's information out there, but it was a little bit harder to find. And now it's all over the place. It's so much easier to access it. But yeah, no, I mean, and looking back on it, it was a good decision, a great decision. The first, I think it was the 2 to 3 years that I rented it out, there was just like, I got lucky. I got lucky that it actually rented out for what the mortgage was. Not to say it has to do that. Obviously, like there's different things that you have to look at once you're going to rent it out. But for me, I just got super lucky. But outside of that, so using it the first time, 2021, when did you really realize the power of the VA loan? Like, it's this product that everybody raves about, that's really most people that have used it in some way, shape, or form, they've got a really good experience, really bad experience, but there's people that just rave about the VA loan, myself included. So what is your experience on when you realized truly how powerful the VA loan is?
I think gone through it and then like looking at it and you mean to tell me I can buy a house with 0 money down and I can ask the seller to pay for my closing cost and I can do this multiple times? That's when I realized I was like, "Oh my goodness, this is like what is going on? How come I didn't know about this? Why didn't I do this early on?" So I feel like that's for the most part, that's how it works with everyone that, soldiers, especially when they use it the first time, like that was easy. It was that no way. It can't be. Cause like in the army, like there's nothing comes to you easy. You gotta like,
Okay.
so doing that and it's like, dude, that was as easy, simplest thing ever. Like I can do this multiple times? Yeah, you can do this multiple. That's when I realized I was like, "Oh my goodness, VA loan is actually pretty powerful. If I need to share this with everybody, I need to share that with as many soldiers as I can." And now, like my focus now is with the lower enlisted. Like the lower enlisted, I'm like, they come to me, we talk about it, we look at their finances. I take my time to just kind of like walk them through. Hey guys, you're at 580. Let's try to get it up to 620. But if they're at 580 because it wasn't their fault, there are some certain things and they manage their finances well. It's like, okay, that's too easy. There are lenders that can approve you your debt to income ratio. I think that's something we're going to talk about as well. Debt to income ratio makes sense. It's just, when you were 18, somebody used your credit and messed it up. It's not your fault, but you can buy. So now is I tell myself I'm on a crusade. I got to help the lower enlisted. They got to get in early because I wish I got in early. And that's where we're at today, helping the lower enlisted buy homes like
Love it.
crazy. PFC specialists, they're out here buying.
Man, the first thing that came to mind when you said that, I was thinking to myself, like, if you're a junior enlisted person and you're listening to this, don't go to the club and marry the person that gives you the most attention. Please, please don't do that. That's the person that's going to ruin your credit. That's it. That's the person that's going to ruin your credit. Use the VA home loan instead if you can. If you're out of the barracks, you can get out of the barracks, whatever the case, if that's a possibility. And if even if you can't get out of the barracks, don't screw yourself. Don't go do it. Don't do the
Yeah.
stupid thing. We know what's bound to happen. Just be patient. Get out of the barracks first. You'll get your promotions. Get through the ranks. It's only a couple years. Don't rush. Don't rush into this process. E1, E2,
Yeah.
E3. You're in the barracks. Don't rush to get yourself out of the barracks. BAH is sweet. Don't get me wrong. It ain't worth it though. It's not worth
That's
it.
right.
It's not worth it.
Unless you've known that person for a while, then yeah, great. Good for you. Kudos.
Yep. Don't meet him at the club. Don't meet him at
Yeah. No, I know we're getting off subject, but I think that's where I realized that the actual power of the VA. Number one, you can buy a house this year, use the VA loan, you know, you live because there's a living requirement, right? It's a VA loan, it's a occupancy loan, meaning you have to occupy the property you're using the VA loan on for a certain period, which is I think it's 12 months, right?
Yep. So and the key verbiage behind it is intend. So, you
Intent.
know, you have to intend to live in it for 1 year. And where that comes into play, right, is if you're thinking about buying a home and it makes sense, but you're not sure, maybe you're going to come up on orders for school or something like that, but you're not really 100% sure if they're going to send you, PCS you out to school, right? Or you're worried about what if I do get PCS earlier than I thought? Do I owe anything? Is that against the rules? The guidelines are very specifically, they're strict enough, but they're vague enough to cover those circumstances. So if that's a thought that you have in your mind, that's what we definitely want to kind of get into your head is like, don't worry about that. Stuff happens.
Yeah.
That's why the VA loan and the VA, Department of VA writes the guidelines that they do is to cover you in the circumstance that you have to move because you're
Yeah.
you're in a unique situation.
Yeah. It's really tailored to, soldiers and military members and veterans as they move constantly from one location to another. But that's, like I said, that's when realizing how powerful it is, zero down payment. It's a pretty easy process going through it. And then you can use it multiple times. That's when I realized, okay, this is an actually, it's a tool that if used correctly with good people behind you with a good plan, you can actually create wealth with it.
Yeah, exactly, and for me, I think that every time I do a transaction, I realize, like, sometimes I learn something new. Not every time, but
Oh,
there's a lot of times where I'm learning new stuff, like learning stuff this past summer. I'll talk a little bit about a story later on, but man, every time I see something crazy happen with it, that's when I realize the power. But I think the first time I really truly realized the power of the VA home loan is when I went to buy my 3rd house right before I got out of the military, right before I got my ETS date. I closed on my 3rd purchase with the VA loan, and it was crazy just to see what was possible. And if you ride the right wave, right, if you're patient through the real estate market and you really are committed to building wealth through real estate and you stick in it for 10 plus years, that's like my magic number. If you stick in real estate for 10 plus years, you're sitting in a good spot, and there's a high likelihood that you're going to be positive. Obviously nothing's a guarantee, but if you play your cards right, you buy the right property, you're listening to the right people, finding the right mentors along the way to help you get into the right things, then you're going to be able to reap the benefits of it. And right, yeah, I mean, now I'm in my 10th year, so it's what, my 8th year, I think, in holding real estate, that I was like, wow, holy cow! I just went from I more than doubled my real estate portfolio just because I'm able to use it again, right? I was able to take some money, move some money this way, that way, this way, that way, and then just like that, it was like, wow, holy cow, the net worth just skyrocketed, right? Just with the strategy that I used. So that was when I really realized the power of the VA home loan.
yeah. When you start seeing that, oh my goodness, this is a life changing thing, right? When you're like, you mean to tell me that this is possible? I can actually now, like, now that's a different problem to have, right? You're like, oh, okay, what do I do with this amount of money here? Where can I put it? Like I said, you said different strategies. Now you got to. Then it comes with different problems. But I think that's a different subject that we're gonna get into later on, maybe.
Yeah. If you're listening and you're like, hey, what's the rule of thumb? 10 years is my rule of thumb. That's the one that I use, is if you can stick in real estate for 10 years and you can keep a portfolio for 10 years, the odds of you having a good experience are exponentially higher and getting a good return, whatever that looks like. And there's so many different things that you can do once you have real estate for 10 years. If you've got your primary home, you got investment property, you start looking at the different ways. And there's a lot of tax benefits to it too, tons of different things, which we can cover on a different video. But if you take nothing else, 10 years, real estate's not a short game; it's a long term game. Like, it's long term investment, especially when you're starting zero down, because you don't have any equity in the home yet.
Yeah,
So you need that length of time to build equity in the home,
yeah.
and 10 years is like that magic number for me. It may happen a little bit earlier, it may happen soon after, but it's going to be right around that mark.
I like what you said there. Real estate is a long term thing. It's not, oh, I gotta use my V alone. I'm gonna get rich.
Yeah. It's not a fix and flip type of thing. Like, you're not gonna buy something and sell it a year later and profit, right? That you can't go in with that expectation. If you're going with that expectation, you're probably gonna pay out of pocket if you plan to sell a year later after purchasing. Very seldom do you build enough equity in the property unless you have a strategy going into it, right? If you buy something that needs some work and you're getting the best deal possible for it, you can make some money afterwards, right? That's a live and flip is what I like to call it. So you can do a live and flip and, 1 year, great. Obviously you're looking at different tax implications, which you should talk to a CPA for, or
Yep.
some sort of accountant, some sort of tax professional, talk to them about what the implications are. But, if you're looking at selling it after 2 years and you have some sort of strategy, that's the magic number in terms of tax implications. But again, talk to a CPA about the tax implications, talk to us about the strategy, reach out to us if you have a certain goal in mind. And, if you have questions, comment on the video, right? If you have questions, we'll answer in the video comments.
For sure.
You want different strategies, different things to look at. You can also schedule a call with us. We'd be happy to hop on a one-on-one Zoom with you if you're looking to learn a little bit more and strategize for your first purchase, your next purchase, your sale, whatever the case. We can definitely help you along the way, and we can give you really help you build out a 10-year blueprint for that 10-year period that you're in. So, if you need help, reach out to us. But the biggest myths about the VA home loan is what we're going to cover next. There's a lot of different things about the VA home loan that people think are true, but they're not really true. They're pretty far off. So what are the ones that you hear the most, Leroy?
Man, there's a lot out there. There's a lot out there, but the most common ones are you need perfect credit score. You can only use it one time. A lot of people who are selling homes are not really wanting to accept an offer that has a VA loan on it. There's a lot of those, but I want to talk about the sellers not accepting VA loans. I don't know why people think that, but in my experience, you know what? Dude, I do know because a lot of people think that, well, because the VA loan, you really don't have a lot of skin in the game, right? It is a zero down payment. People are not putting down any money on it. So they think that, you know, the service member or the veteran really don't care. They could just back out and back out. That could be further from the truth. We really like soldiers want to become homeowners. So just like when you give a soldier a mission, it could be the smallest mission you give them. This is your mission for the day. Their goal in life for that day is to accomplish that mission. So when they get into buying a home, they have that same mindset. My goal is to close on this home. I got to do everything right. Everything that I have received from my realtor, my advisors, to close on this home. Most of all, most of the VA loan buyers this year, 90% of them close. 90% of them sellers accepted it because they know, yes, VA loan is a powerful tool. It is, for the service members. And a lot of people do like working with service members and veterans. So I think that's a huge myth there.
Yes, dude. And, if I were to give you my take on that, my take on why sellers don't accept VA loans is because your realtor doesn't know enough about the VA loan. If you've been through that experience where people are not accepting your offer because you're a VA buyer, you need to really assess who you're working with. I'm not saying go make any crazy decisions, but, figure out, do they know enough about the VA loan to convey the power of the VA loan? Because at the end of the day, these, like Leroy said, we're going to close. We're not
Yeah.
contingent on funds. We don't have to sell a house a lot of times. We don't have to sell stocks a lot of times for the down payment, right? Conventional buyers do that all the time. They have to. But if you're a realtor, especially outside of military markets, because military markets, Fayetteville, Killeen, Hawaii, Fort Campbell, Fort Carson, any of the major military bases that you're looking at, San Diego, you're going to have people that are really niched down in the VA loan, and they know the VA loan like the back of their hand. And a lot of former military or
Yeah.
military spouses or realtors in those markets, they know it and they're invested in
Yeah.
it. In those outer markets, though, you don't get it so much, and that's where you have the problems. That's where you have this myth come, and you ETS'd out. You're going back home to where you're from, and you plan to use this thing. If your realtor can't convey the power of it, and the realtor on the other side doesn't understand that just because you're coming in with zero down, it's actually not a weak tool, and they can't understand the power of the VA home loan, that's where they're going to advise their sellers. This person's coming in with zero down. They don't have any skin in the game. I
Yeah.
would I would go with this offer that's a little bit lower because they've got a lot of skin in the game. But
Yeah.
if you have somebody on your end that's working hard for you and saying, "Hey, I know the product," and they can really speak that experience to the other agent, that's how you quell the fears. That's where the value is in picking that right person, right? And hiring the right person to represent you when you're going through this process. So I think one of the other myths that I've heard, I don't know if you touched on it, but was about appraisals, and I get that a lot. I get appraisal concerns a lot from people, and it's not super complicated, honestly. I think the appraisal aspect, VA appraisals, they're meant to protect veterans. So if you ever hear like, oh, VA appraisals are harder, yeah, they're a little bit harder. They are, but it's not going to be anything to where you can't get past the hump. I've gotten borderline major renovation properties, real major renovation properties. We've gotten them through. We were able to do what was needed to get them approved. And really what it boils down to with the VA appraisal is health and safety, right? The VA is not going to loan on it if there's major health and safety issues. So that's the biggest hurdle that you have. So, chipping paint is one that people freak out about a lot, especially in Hawaii, right? I'm sure it's the rest of the US too, but chipping paint, when I first heard that, I'm like, why? But it really boils down to the lead-based paint aspect. And especially in Hawaii,
Yeah.
there's a lot of older homes. And a lot of lead-based paint was used back before 1980. So that being a hazard in itself, if there's chipping paint, they're going to say no. But that's when you come in and figure out the remedy, right? The right person, the person that knows what they're looking at, they're going to help you get to that yes solution if that's what you want. And if it's the right move for you.
So is it that people are saying that it's impossible to get the property for the appraised value? Or like, example, let's say it's a we'll use Hawaii numbers. Let's say it's $1 million home, and are they saying that if the VA you're offering an offer on this home and you're using VA loan, they're skeptical whether the appraised value comes in or not? Is that what it is?
So, in my experience, at least, it's only been really geared towards the actual conduct of the appraisal and getting it approved, right? Because what does that mean to the seller on the back end is, okay, well, if the VA doesn't approve this and gives red flags on the appraisal, then I've got to come out of pocket. And it really depends on what market you're in, of course. Like COVID market, they're like, nope, we ain't doing anything to this property. You want to do it, you could do it yourself. You want it for this price, you can do it yourself. But in the market now, we've got a lot more success in, hey, we need a couple more repairs for this to get done so that it actually does appraise and they
Yeah.
actually give it the approval for health and safety. So
Yeah.
that's a
Appraisals here in Texas has been, I mean, they've been off and on. If it's a $250,000 home, it's either over a little bit or just below a little bit. It's not that drastic, especially with VA appraisals, but they do go through. They're pretty good.
yeah, love it, man. All right, so next topic we got is unique ways to use the VA home loan. It's not just straight up like I'm going to go buy a house, right? There's so many different things. There's a lot of strategies that can benefit you both in, creating cash flow, in creating generational wealth, in just yeah, really like building and acquiring an asset that really makes sense. Right. So there's a couple different things and really like it's all geared towards achieving your goals, right? Whatever goals you go in with, there's a couple different ways that you can use the VA loan specifically to achieve those goals. So the first one, let's actually start off. Maybe you have a little bit more experience with this one, Leroy. Construction and renovation loans. Coming from Hawaii and being in Hawaii, you know that I don't have a lot of experience with construction renovation loans. I know the basics on what the guidelines say, but permitting, obviously, in Hawaii, you can't expect construction and renovation loans to get pushed through. No lender that I've spoken to and reached out to offers either of those. Construction is going to take you 2 years alone to get through the process with permitting. Now they've got a new system, a digital system that's supposed to expedite things like that. So hopefully we see that later. But, Hawaii, about 10% of the land is buildable and it's almost all spoken for. So odds of getting a construction loan here are slim to none. I don't think anybody offers it. And the renovation loans, nobody that I've spoken to has offered it. There's a couple people that market it, but ultimately they don't have the product anymore. But what's it look like in Texas, Leroy? And maybe that speaks a little more to the rest of the US.
Pretty actually easy here in Texas. I think the timeline is it's a little longer because you got to build, but I've only done one so far, and it's actually pretty easy. Get the land, get the permits. Permits is pretty easy in Texas. It's not 2 years.
Love that. Love that.
You can get approved permit a couple weeks, easy, and then comes the build. The one we did, I think whoever I can't just name the lenders on here, but they're probably gonna see this one. They bought the land and then they get the permit. Once the permit got approved, then they built. Once they built, they combined all of that, the construction loan and the land into one, and that's their VA loan. They
Love that.
combined it all together into one VA loan. And they didn't make their first payment until it was actually construction was completed.
That's amazing. Love
Yeah,
that.
it took what 90 some days maybe.
Wow. To
But
from like start to finish?
oh no, the
Uh,
building.
all right, the building. Okay. That makes sense. That's
Yeah,
still good. That's still
yeah,
really
3
good.
months. It took them like 3 months to build the actual house. But I wanna say 6 to 8 months, the entire thing, I wanna say.
That's awesome. We
Yeah,
well,
let me
this house
see.
that I'm this
Yeah,
house that I'm in now, like we just had a new construction, well, a lot go up. It's two houses on the same lot. Foreign developer went and tore down a house and put up two new homes on a 10,000 square foot lot, zoned R5. And that took over 2 years. I mean, they're just now going on the market. And I've been in this house, yeah, almost 2.5 years. And that house was, I guess it was taped off before I even got here. So that place was basically quarantined. And they were waiting to tear down to get permits done by the city before they tore it down and started the process. So, you're looking at 2.5, maybe 3 years or more for
my
the process
bad,
of
my
ours.
bad. The construction took 6 months.
Okay.
Took 90, so 9 months for the entire thing
That's
to
so
get it
good.
complete.
That's
Yeah.
still so good. I wish. I wish we could do that out here. There's definitely a lot of properties that need the rehab, and there's probably some properties that really need to be torn down and put back up. And just obviously the cost is pretty hefty, so that's going to be a burden out here. But in other places across the U.S., much more feasible.
Yeah. This Texas has a pretty good, regulation, so it's not too strict.
That's awesome. It helps keep up with the value of the communities too. It helps keep a lot of pride in ownership. It helps people keep up with the properties when it's easy to get through that permitting process. And that's one of the challenges you face in Hawaii is you can't push through. Yeah. Permits of any type are just, they take a while. Like that process to build a whole new house. I mean, you might be able to add it
Sometimes
back.
permit here can only take like a month.
That's awesome. I would say that I think that your new build timeline is more comparable to the timeline to put a new bathroom in the house, right? Like I was looking to put a bathroom in the downstairs of my house, and like that's the amount of time that I was expected or I was given to expect putting that in. I'm like, "Geez, this is so long."
Yeah,
So
certain states have strict guidelines, and there's so many red tape regulations that just restricts people from doing what they're supposed to be doing to their or what they want to do to their house or even just building.
yeah, that's huge. All right, well, next one, multifamily. Multifamily is another one. It's not impossible in Hawaii, but it's you start looking at pretty high price points. But if you do the math right and you plan appropriately, it's possible. So, what's your experience with multifamily, Leroy? I know we've talked about it before with some guys going out your way. What's your insight on multifamily?
Man, Ryan, I think this is one of the best markets for soldiers to get into. We PCS from one location to another. Like this can be like a double hack. You could use this as a house hack. You could buy a duplex, you can live in one, rent out the other. That's like the simplest common way that soldiers are doing it here for good. A lot of these guys and gals, they come, they buy a duplex, them and their family live on one side, and then they rent out the other one to their buddies who's not, listening to this video because they're looking at something else.
Right.
Hopefully they're watching this, but they rent it out, and then when they leave, They rent out that one side they've been living in, and now they got a duplex as a investment property.
Hmm.
So multifamily space is really huge here in Texas. And I'm gonna go off script a little bit more, but I'm gonna elaborate on the
Do it.
multifamily thing.
Yeah,
So
do it. Go for it.
yeah, I experienced one thing here, like two guys, they combined their eligibility, right? They bought one duplex and they used, their eligibility together. So one was living on the other side, one was living on the other side, and they both own it. They're both like one pay half, one pay half. I was like, oh, dude, that's pretty clever.
Dude, I love that.
Yeah, and they're still there, and I was like, what is the plan? Like you said, Brian, planning is all about planning, and these guys are super good buddies, I guess. They're thinking about, like, once their time is up, they're gonna buy another one. They just keep doing that, rent out those. And I was like,
There's
"What?"
bro.
It's like, "Are you kidding me?"
If I knew about multifamily, if I knew that you could buy a multifamily home with the VA loan when I was in North Carolina, no brainer, hands down. So with the multifamily aspect, buying it with the VA loan, you could buy up to a fourplex with single entitlement, right? So you can't go into five. Five starts diving into commercial, but in that joint entitlement scenario, there's a couple different scenarios. You're going to want to talk to a lender about this. I'm not the professional on how this works out, but in a joint entitlement scenario, you can buy up to a sixplex. A lot of people don't know that. But the key things to remember about to drive home about multifamily, one, it's, I think, the second best opportunity on the market. We'll get into the best opportunity in a second. I think it's the second best opportunity for military in the market because it allows you to subsidize your mortgage with rental income from the other units that you're not living in. So that's the best way to get a property that either breaks even or cash flows. And you can really start building that wealth and building the equity in the home. Because that's what you're looking for, is something that can build that equity without you having to pay out of pocket. Obviously, there's scenarios you might pay out of pocket. It might make sense. That'll be more for a one-on-one coaching call if you're interested in hearing about when and where that makes sense, right? And how to assess if that's a good idea. But
Yeah, like you said, everything comes down to the planning phase, right? When they meet with the people that, "Hey, tell me your goals. Let's sit down, let's look at your goals, and then let's create a plan." Okay, great. This is your goal, 5, 10-year goal. This is how I can help you achieve that goal. Just plan for it, and then you create an execution timeline for it.
yeah, that's it. And the other thing I want to drive home too is, like, I see a lot of, to be frank, they're jackasses, mostly coming out of San Diego, that are saying, "Hey, come buy a rental property or come buy investment properties with your VA loan." Then you start getting people that see their ads and then they reach out randomly to say, "I want to buy an investment property with my VA loan." No, you cannot do that. You cannot buy an investment property with your VA loan. The VA loan is specifically for a primary residence. Now,
Yeah,
that being said, you can build the portfolio and, like, you can get those other units and rent them out. That's perfectly fine. That's well within VA guidelines. But if you're not living in the home, you don't plan to live in the home, you're going to violate the VA guidelines
that
and
is
you're not going to be
mortgage
allowed to
fraud.
buy it. That is mortgage fraud. Don't do it. Don't fall for these stupid hooks. And it's sad. It's sad because these guys are prior military dudes that are putting this information out there and getting these little hooky advertisements, right? They're throwing this misinformation out there and people are falling for it. Like, they're paying $5,000 or something like that for these courses just to learn that, well, I'm not really buying an investment property per se. I'm buying a place that I have to live in, and then da 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 da. And of course, on the back end, they're probably like, "Oh, well, whatever you do with it, just don't do it. It's not a good idea. Just don't get yourself wrapped up in something." Because I've spoken to people. Obviously, I'm pretty stringent on the VA guidelines and understand what you can and cannot do. But a couple months ago, I had a listing where I had a buyer call that was interested in it, and he told me his horror story where he bought a home because his realtor said he could do something with it that he wasn't allowed to do, and turns out the VA found out, or the lender found out, I forget which one, and they made him sell the home and pay back and get rid of it. He didn't have any, like, he had to come out of pocket. He lost a substantial amount of money. I told him, I was like, if I were in your shoes, I'd probably be looking at a lawsuit, honestly. Whoever told you and advised you that you could do that, whoever let you go through with that, unless you knowingly lied and you did it yourself. And, that's messed up. And that's where some of these people are guiding people the wrong way. So all that to say, just because somebody's was in the military before, just be careful about what you're listening to and what you're absorbing, making sure that you're verifying, you understand the legalities of going into this too. Some people have risk tolerance, and if that's you, then hey,
That's
no harm, no foul.
coming from the Ranger. That's coming from the Ranger, guys. But you know what? We're going to give you guys all of this. People charge money for this. We're going to give it to you for free.
Yeah.
You're getting free game right here. Free.
Yeah. Honestly, you want a one-on-one with us, just give us a call, give us a phone call, schedule a meeting with us, schedule a Zoom. I will never charge a veteran to give them advice on the home loan, direct one-on-one advice. And then after that, of course, what you do with it is on you. But so we talked about multifamily, we talked about joint entitlement. Let's talk a little bit about seller credit before I get into what I think is the number one option on the market for VA buyers. So paying off debt with seller credit is a huge thing for me. That's one of my favorite things to do. And it's something that you can't do with any other loan product, right? So the VA loan, you can ask for, what is it, Leeroy? I think up to 4% for seller concessions, right? And that doesn't account for credits and concessions are lined up differently. Of course, that's on the lender to explain to you what the difference between those are. There is a difference between the two, credits and concessions, but you're allowed up to 4% towards your closing costs and such. And then there's some additional things that are allowed. So have you had any experience with that, Leeroy, like paying off the any sort of debt or like doing crazy stuff? What's the craziest thing you've done with seller credit?
Yeah, I think that's probably the craziest thing. Was I'm not going to, obviously disclose things, but Amex, right? Client had an Amex card and it was off balancing his debt to income ratio. And we were able to ask a huge chunk of the credit, which was 4% of the purchase price. We asked the full 4%. And then we used some of that money that the seller gave us, seller credit, to pay off the entire Amex credit card. So they paid off the entire Amex credit card. And then that balances out his debt to income ratio. Then you're like, okay, you've freed up this amount of money monthly that now you can use it towards your monthly payment towards your mortgage. So that's probably one of the craziest things. I didn't know you can do that until I saw that. I was like, man. But again, Ryan, like you said earlier, only certain lenders can do stuff like that. There is a level to that stuff, okay? Some lenders are really good at what they do, and some are not.
Exactly.
So it is good to shop around for lenders as well.
That's very much in line with my story too. This past summer, I think, was the most drastic impact seller credits had on any one of my buyers. Honestly, since I've been doing it, I've gotten tons of seller credit for buyers. In the market we're in, pretty easy to obtain seller credit if you're kind of flexible with what you want and you have realistic expectations. But over this summer, I had a guy who was looking at a certain price point and he wasn't quite finding what he wanted at that price point. So we found something that was a little bit higher, and we were able to squeak it by on DTI with the seller credits, doing a rate buy down. Temporary, or not a temporary, a permanent rate buy down would have gotten like just there. Temporary would have been better, but of course that doesn't count towards your DTI because it's only temporary. But we had those options kind of in our back pocket, and as we went through the process, the loan officer that I work with the most, dude's phenomenal. Like, he just finds anything that he can to help the person that he's working for and working with. And what he did with this one, he comes to me one day, he's like, hey, we've got a lot of seller credit. We can pay off debts instead of rate buy down. What do you think? And I was like, well, run it by him. But yeah, I mean, like, that's huge. If that makes sense and that makes, that works out, do that. Like, that's awesome. He's like, yeah, it'll shave about $1,000 a month off of his DTI. It's like, what rate buy down product is there out there that you can shave $1,000 a month off your DTI? That was when I heard that number, I was like, obviously it's not the exact number, but roundabout, it was mind blowing. I was like, $1,000 a month. Holy
That's
cow. They
no,
paid off 2 debts,
that is crazy. That's
bro.
crazy. Now
Yeah.
imagine, guys, what he's saying is imagine this. You're making $1,000 in payment towards whatever debt you owe, whether it's credit card, personal loan, car loan, right? Let's say it's $1,000 every month before you even got into buying the house. You were paying $1,000 towards those debts. That's what he's talking about. He's talking about that they were able to get the credit from the seller and pay off that reoccurring debt that you have been making payments on it for 6 months, 12 months before you even start buying this house. That's mind blowing,
Yeah.
dude.
And here's the example, I guess, like the theoretical example that comes to mind, right? You make $10,000 a month, right? You need to be at 50% DTI, but your DTI after you purchase the home is going to be about $6,000 a month. And, that's causing the red line. They're like, no, we can't give you this loan. Obviously, you got to think of something else. Well, you've got 2 cars. Maybe you got a car, your wife's got a car, or husband or whoever, your spouse, significant other's got a car. You've got 2 loans out on, and they're $500 a month. Okay, cool. I owe $10,000 on each of these cars. We got $20,000 in credit. At $20,000, we go pay off those car debts. We say, all right, cool. Here you go. That's an auto loan. Guess what? Now your DTI just went from 6,000 to 5,000. Now you're at that 50% threshold. And obviously, the numbers are different based on the lender overlays, but um, that's what we're looking at. That's how we're balancing the numbers and how a VA loan professional can really, enhance your home buying process. And really, I mean, just your financial readiness as a whole. You're not
Yeah.
paying on car debts anymore because you bought in a market where seller credits are available and you made the most of it.
That is huge. I think that is, yeah, you know what? I'm with you. I think this is the biggest part, the biggest or the most unique thing about the VA loan is using that to pay off debt.
It's huge. Now, I think the number one way to use the VA home loan. This one, a lot of people buzz about it. They don't know a whole lot about it. I've done, I think 13 or 14 of them over the past year. Huge. What do you think it is?
Assumption?
You know what it is. The VA
No,
home
bro.
loan assumption. The VA loan
I'm
assumption
sorry.
is
I'm sorry, man. I should have been looking at the notes.
you're good.
Dude,
You're
yeah,
good.
I've only done one of those. I've only done one of those.
My gosh. Yeah, I'd be pushing them. I'd be pushing them in Texas. But here in Hawaii, especially, man, it's powerful. That stuff, like the VA loan assumption is the best opportunity on the market for VA home loan users and even non-VA home loan users. Like if there's an opportunity, and in some of the outer markets, there's going to be opportunities, right? Out of non-military markets, there's going to be opportunities for non-VA entitled buyers to assume a VA home loan because the buyer pool just isn't there. Talking specifically in VA buyer markets, the VA loan assumption, what is it? The VA loan assumption is where you can take over an existing loan. Maybe it's got a 2% rate, 2.5%, 3% interest rate. Unheard of right now. What are we in the 6s still? I think we're low
Yeah.
6s right now, maybe high 5s. So if you can get an interest rate for half the amount just by coming in with the difference between the principal and the purchase price, you can just take over that loan and the lender has to reassign it to you. And all government-backed loans are assumable. So FHA, USDA, VA, they're all assumable loans. VA is most
Yep.
commonly assumable. But if you're somebody that's in the military, you're looking to buy a home, you've got some cash laying around, you've got adequate entitlement to relinquish the entitlement of the seller, this is something you should not look past. You need to look at it. You need to consider it. If you've got money sitting in a savings account, in a money market, in high yield savings, whatever, it's just kind of sitting, collecting some interest, take that money, consider using it. Obviously, I can't tell you what to do with your money, but consider using it on a VA home loan assumption. I think right now, for about 100 to 150,000, you can get a strong VA loan assumption in Hawaii with a rate in the 2s or maybe low 3s, right? There, and as prices continue to drop a little bit, that gap gets smaller. So it's becoming more feasible for people that just have a little bit of money sitting in the bank. Obviously, it's not for everybody. Not everybody can get into it, but that's one that I've seen just over and over again, whether you're buying or selling, just benefit the person that's making the move. As a seller, you can get a little bit more money with the VA loan assumption. I don't know if you knew that, but as a seller, you can market that VA loan assumption 2 point whatever rate, low gap.
Yep.
You need to get
Yep.
another 10, 20,000 over so that you can break even. That's something that people might come to the table and say, like, I'll pay a little bit over. And with the VA loan assumption, you don't have to do an appraisal. There's no appraisal required. There's no termite inspection required. You're just taking over the loan. The loan's already been approved. So all those contingencies that you need to take out a normal loan no longer apply.
Yep.
They're just handing over
But
the loan to you.
now the only thing that you have to do as the new buyer, obviously you got to get approved for the loan, right?
Yep.
Yeah,
That's it.
that's the biggest requirement is you getting approved for said existing loan.
Yeah. How
Yeah.
was your experience when you went through the process? What was the experience for
Yeah.
you when you did it with your buyer or seller?
Again, it was pretty easy, smooth, simple. 45 days closing. So typical closing here in Texas is 30 days, but it took us 45 days to close on the assumption. Very, very smooth and easy. It all depends on the buyer. The buyers that did the assumption this year, they were on top of things. When the lender needed documents, they were on it. There were some things that they needed letter of explanation on. They sent it right away. So it can only move as fast as certain lenders work. And then along as with you as the buyer as well. If you really want to get the house and you want to move forward with it, you gotta be on top of your game.
Yeah, 100%. Well, I won't ask you about the servicer. What I'll say about the servicers, there are some that can do it in 45 days. There are some that will take 6 to 7 months.
Yeah.
The timeline is going to vary. Obviously, like Leroy said, the buyer's a huge part of what drives the timeline for the VA loan assumption. If the buyer's not on top of that paperwork, it could take a while, and you're kind of at their whim. But another big factor is just whether or not the servicer is playing ball, if they have the adequate systems. I've been through a process, similar 45 days, start to finish, super smooth, easy process. I've also been 3 months. I've been 6 months. I've been 7 months. I've seen 7 months. I haven't been in 6, 7 months myself. But the one of the last ones I did was with a servicer that they didn't have a loan assumption department at all. They put it under, I think it was loss mitigation. And they had no idea what they were doing. The entire time it was pulling teeth just to try to get anything. And that nobody wanted to deal with it. I don't think anybody really wanted to take the bull by the horns and help us out. So that one was a struggle to get through. But overall, the experience, yeah, it'll vary, servicer to servicer, case by case, kind of depending on where you're at, or what servicer you're with. That can definitely vary. Now, that cash gap, a lot of people ask, can you get secondary financing for it? Have you had any experience with that, Leroy?
No, I have not. I was gonna ask that. Let's say let's say I want to assume a loan. They're listing it at $300,000. The existing loan is 280, and I don't have $20,000 laying around in the bank. What other ways that I can assume it without coughing up all that cash?
Yeah. So there's some lenders out there that are offering second loans. A lot of times you're still going to have to come in with something. You're not going to be able to come in with zero down and just take out two loans, even if DTI works, unfortunately. And the reason behind that, a lot of lenders don't want to be the second person to get their money back, right? And we'll call that second position. They'll be second position lien holders. So when they give out that loan, if the buyer ends up defaulting on it, then they're going to be SOL for that money. They're going to be, if the buyer can't pay any of it back, then the servicer is getting their money back first. And if the well runs dry, then, well, that second lender doesn't get it back. So I believe you still got to come in with, 15 or 20% down for the total LTV, because they'll only go up to, I believe it's 75 or 80, a lot of lenders. Some will go up to 90, I believe, but
Oh,
there's
wow.
a bunch of different overlays for that second one because it's a higher risk loan, right? It's a higher risk for that lender to get their money back. So that one's the tougher one. But for anybody out there that's investor savvy, that has maybe either you're looking to buy a place or you're looking to sell a place, seller financing is an option, right? Again, you're taking on more risk, just like the lender giving out the second loan would. But I actually closed one a couple months ago where we did seller financing for about half of that gap. So I think the gap was about 400,000, 300 or 400,000, and we came in 150, 200,000 down, seller finance 150, 200,000. And it really, again, it boils down to the resources that you have, right? Even, me, I'm not a seller financing guru, right? I'm not the finance guy. I leave the finances to finance people. Lender's not going to help you out with that either, though, and my go-to wasn't the lender. It wasn't, anybody else. My go-to was that title officer who connected me with the right attorney, because I have the right
Yeah.
title officer that has the resources too. And like, the people that the right realtor is going to be connected to, they're going to be the people, they're going to have connections as well. They're going to surround themselves with the right people. So, that was the
Dude,
craziest one.
Ryan, you're like throwing around numbers. You're like, yeah, 250,000. That's like an average house here in Texas.
I know, it's nuts. That was part of the down payment. You know,
No, that's crazy.
people made the right moves too. Coming to Hawaii and having
Yeah.
that ability, right? If you start early in your career and you just buy the first house, buy the first place, buy the second place, buy the third place, you're gonna have that
Planning
equity.
again. It goes back to planning. But
Yeah,
man, yes, sir. I do like that part of the loan where you can assume it. That's a pretty easy way to get into home ownership too, especially if you have like some resources just laying around that you could
yeah,
put it into.
dude, it's huge. It's phenomenal. I couldn't believe, you know, how that one went. And we've had some pretty good VA loan assumption wins over the last year, but that by far was just like, those guys were so intent on making it happen. And, they knew each other, they're friends, and they wanted to get it done. So that's another factor in it, is like the trust factor that, they're okay with it. So hold harmless, like, they knew that what they're getting themselves into, and they're all
Yeah.
for it. They've got the terms and everything, but man, they made it work. So where there's a will, there's a way. By all accounts, like, you try everything that you can. There's resources. There's different creative financing methods to make it happen. If it's supposed to be, obviously you can't guarantee that a seller is going to want to do that. But if you're a seller and you know somebody that wants to buy the place, obviously that's an option for you out there too. But all in all, these people are in that position because of what they set themselves up to do. Everybody that's looking at it, especially people in the Navy, right? Like the Navy, I always look at it as like, if I were to go back in time, if I were to change services, I love the Army, love my experience with the Army, but if I was going to be in any other service going back in time, hands down the Navy, and solely for what I know about the VA home loan, I'd be like multi millionaire if I was stationed with the Navy from the start to finish. And I just bought everywhere
Is
that I
it
could
because
go.
of their duty station?
Yeah. Oh yeah. Their
Yeah.
duty station. Shoot. All of those coastal duty stations, all of the high BAH, all of the high conforming loan limits. Nuts, man.
Yeah.
Like 10, 15 years ago, you're buying 10, 15 years ago in San Diego, Jacksonville,
That's why these Navy
Charleston.
SEALs come out millionaires.
Right. Well, they write their book. They like to write books and tell all their stories. That's how they become millionaires. But you see some of these admirals coming out. I think, shoot, one of the admirals I worked with and worked under in Cuba, that dude, he had like house on house on house. And all
Good
right,
for him.
cool. You're ready to retire. You're good to go.
Power of the VA loan, ladies and gentlemen.
That's it, man. And again, anybody watching this video, if you're looking for more information about the VA loan, hit like, hit subscribe, comment, ask questions, set up a meeting with us, reach out to us on social medias. We'll put it all in the description, and we'll get you the information so that you can connect with us and we can chat and we can just have these candid discussions and help you out, help you get on the road to doing this just like we have, right? There's so many people that have done it before you. Tried and true method. Real estate's just that, it's, to me, it's the hottest commodity. I mean, everybody wants it. Everybody needs it. Everybody needs a house over their head. Investing, you can't really invest in food and water the same way you can invest in real estate. But, if tech died tomorrow, if AI died tomorrow, you're still going to need a house.
Doesn't matter where you're at in the country. Give us
Nope.
a call. Schedule a call. We got you.
Yeah, buddy. All right. So I want to hear a little bit about more of your most memorable story. I want to hear with the VA loan, wherever it's at, at any period in time. I've already kind of touched on mine, so I won't touch on mine again, but I want to hear yours. What is your most memorable story with the VA home loan?
I mean, most of them are like, I remember every single transaction, every single soldiers, veterans use their VA loan. But the one that really stood out for me this year was when two PFCs bought a house.
that duplex.
because I kind of like it took me back in time. It took me back in time to where I was like, man, you mean to tell me I could have done this too and I didn't do it? Young couple using their VA loan and they didn't know anything about it at all. They just saw me on TikTok, reached out to me. We had a conversation. They were like, "We're trying to find a place to rent." And I said, "Why rent? Why rent?" They're like, "Well, because, we have BAH." I was like, "You both have BAH. So why rent?" "What do you mean?" I said, "Why don't you buy? Use your VA loan." So they're like, "Tell me more about that." So we sat down, we talked about it. And then, like I said, they shared with me their goals. They're like, "Okay, my goal is to become sergeant in the next 2, 3 years." I'm like, "Great." And then my next goal is, obviously we want to have a family. I'm like, "Good." So what are the things that you think can, get you to that point and all that? But, that's going to that. And then I kind of like walk them through, guys, you're a PFC. You want to be a sergeant in a couple years. You buy a house now. As you grow in the family, maybe things will change. You can use your VA loan again. You can start building your portfolio. But handing them the key at closing, they bought a brand new house. They bought a new build here in Texas. The builders here, they are handing out like incentives like no other. So they put $50 down to secure the home, and then they got the $50 back at closing, and that's all it took. When they took the key, they like started crying. They're like, "Man, I, I'm the first person in my family to ever own a home."
That's amazing.
Yeah, and like I'm only 21. I'm like, "Oh."
I love that. I love hearing that.
That got me going. I was like, "Man, okay." Love it. That's probably the most it's rewarding. I would say doing this, especially with service members, doing it and then helping them realize that, hey, we can become homeowners too, and then we can use it as a tool to create wealth if that's the goal. Like I said, like you said earlier, just if it's in the goal, we can create a path for it. But that was probably the most memorable one for me. I'm sorry I went off on a tangent, man.
That's beautiful. I know. I love it. I love it. Like I said, I already kind of shared mine. I already touched a little bit, both between the guy that I had over the summer with the seller credits and the seller financing. Those are just like holy cow type of moments, and just seeing these people, get in their retirement home and, reach the goals that they're looking to reach. It's amazing. Like that's what it's all about. That's if
Yes,
you're
sir.
if you're talking to the right person, like that's where their focus is. Their focus isn't on the sale. It's about helping people reach their goals and being happy for those people when they reach their goals. So that's phenomenal. We've talked a lot about the pros, like the ups, the big ups and all the cool, great, wonderful things about the VA loan. But now it's time to talk a little bit about where we get it wrong when we start the process, veterans as a whole. So what have you seen? What do veterans typically get wrong when we're starting to use the VA home loan?
I think we've been alluding to it throughout the conversation. What I would say is planning. You get it wrong if you don't have a plan. You get it wrong if you don't have a goal set. It's not just buying a house, not just using your VA just because you have a BAH. Where we get it wrong is, what? Private Smith bought a house. I'm going to go buy a house. Well, Private Smith has a family, has a plan, has a 5-year goal, 10-year goal, 15, 20. Do you? Private Smith has a budget. Private Smith has a habit when he receives his paycheck. Where we go wrong is we not understanding that sometimes if we create bad habits and make bad decisions financially, we can get into trouble if we buy a house, not understanding that if we don't make payment, we can go into a hole, go foreclosure, and that stick with us for 10 years or so. I think that's the biggest mistake. I've seen a lot of veterans today go into foreclosure here in my market because that planning piece, the realtor the lender failed them to help them create the plan. So they just buy the house because they had BAH, but they didn't look into the future. Okay, are you going to PCS? Are you going to get out? What are those things? So many different factors, but that's probably the biggest part for me because I see veterans going to foreclosures and it hurts my heart. It's like, why? That's why I say I'm on a crusade to really educate soldiers and veterans, military members and veterans. Guys, let's create a plan. It's just because you have a BAH doesn't mean you need to buy. It's okay to rent sometimes. But when you're renting, create a plan for that and have goals. When you create plan with, with the right people, the right team, you'll get it right. And I think that's where we really get it wrong. It's proper planning. You've been alluding to this the entire time we've been talking about it. I think that's the biggest one because I've seen a lot of foreclosures and I pull it up on the market and I see another VA loan here, foreclose, foreclose, foreclose. Why? And it comes
Yeah,
to that piss
exactly.
poor planning.
Yep. And just to kind of tie it back to some military stuff, right? And maybe like empathize with some of the people that are watching this video. When's the last time, especially if you're a senior leader, when's the last time you saw anybody do MDMP alone? Have you ever seen that? I've seen people try to do it. You know what happens? They foreclose on the fucking op order. That's what happened. They foreclose on the damn op order and they get smashed by their battalion commander.
Dude, I don't know. Yeah.
I
You
say
know,
that to say this, and that's a military thing. Yes. I got that from the military. I say that to say this. So many freaking leaders I've heard say that. I still use it. But putting together the right team is the most important thing because even if you have a plan, right? It's great that you can read on Google. Can you trust everything on Google? Maybe, maybe not. Who knows? I'm not here to tell you whether or not you can trust what you're reading on Google. But what I'm here to tell you is that if you go into this with the right advisors, you go into this with your key personnel, you've got your finance person, your lender, right? They're helping you budget. You've got your real estate person, that's your ops person. You're the commander of your future, right? You're the battalion commander, you're responsible for this, but you can't do it alone. And you shouldn't do it alone. You shouldn't go in. You should have a general plan, an idea, an intent of where you want to go, what you want to do. But you got to bring in the right people. And that's where I see veterans get it wrong right off the bat. When I see veterans working with, cousins, aunties, uncle, because they're family. It's cool. It's great that you want to go to family first. Totally understand the loyalty aspect, but it there's a drastic impact that they could have on your purchase if they don't know what they're doing about the VA loan. You know, I choose not to work with different niches because I have no idea. Retirement, that's a big one. Retirement homes, 50 plus, 55 plus communities, leaseholds. I don't touch those. I refer those out. I will send those to people that are professionals. But VA, I'm the guy. Like I'm the person you go to. You don't go to uncle's auntie or whatever because they said they know real estate and they sold a home in the last 5 years. It's bad. That's bad, bad, bad news. Find the right people to get on your team. It's worth the investment. And a lot of times it pays for itself, especially in the market right now with this whole NAR stuff going on where, the seller doesn't have to pay the buyer's agent's commission. That's a big emphasis for sellers, right? It didn't really change a whole lot of anything other than disclosures and like putting it out there that you don't have to pay. The sellers don't have to pay the agents, but since we're in a buyer's market, they're doing it anyway. But picking the right person is going to pay off. And that's a lot of the case where it does between that, your seller credits, your monthly debts, all those different things, like they pay off tenfold. So if you ever really question what a realtor does, that's the value in having a realtor, especially in your niche. And that goes for all different niches across the board, not even just VA, but if you're an investor, find an investor savvy realtor. If you're retiring, if you're luxury, you name it, find somebody that's in your niche.
Yeah, no, that's good. That's good. I mean, we went too deep on that one, but like the basic things that buyers, military guys, gals, veterans get wrong is thinking that, okay, I'm going to look on Zillow, on realtor.com for the house that I want, the budget that I want, and not get pre-approved first. You don't know what your budget is until you actually meet with the lender and then they look at your finances and they look at, financial backgrounds and figure out how much money you can get pre-approved for. You can't just think in your head and say, I want a $300,000 home. I'm using Texas price range, by the way. I want a $300,000 home when you haven't talked to a lender to see if you can get pre-approved for a $300,000 home. Those are the basic things, get pre-approved, talk to a lender, before you even look at a house.
Exactly. That's it. I mean, that's huge. Whether it's talking to the lender first, getting pre-approved with somebody that, is recommended by your friends that have used them, that's VA professional, or taking, personally, I would say whoever your realtor is, you find the realtor with a reputation, go with the loan officer that they recommend because, they've got existing relationships. If they're in the niche, then they're going to have a really good recommendation for you. They should have a really good recommendation for you. So find that. But kind of going along with that budget aspect, people focusing on the interest rate versus the monthly ecosystem is where I see people going wrong. For my last purchase, I wanted to be a person that does what he preaches. I want to practice what I preach. So I bought my last house 2.5 years ago. Rate was 5.675, right? And ultimately, I can tell you from having that experience and going through that and believing in what we do, the rate doesn't matter. The rate can help you. The higher rate can help you. I think I got 5% total in credits and concessions when you lumped everything all together. That covered everything. I had to come in with a little bit so that I could exceed the conforming loan limit for VA, but it wasn't because, didn't have anything covered for the house. Everything closing cost wise was covered. Insurances were covered. There's a lot of prepaids that I was able to cover with the seller credits. So, practicing what I preach, I made the right move in terms of buying a home that I could house hack, and buying it in a market like this. I house hack. The payments are right. The plan's right. As long as I keep following through with the plan and I'm doing what I told myself I'm going to do, you know, that it works out. Right. And shoot, I might sell this house next year, 2 years, who knows? But, I'm certainly almost guaranteed going to make a profit on it because I picked a live and flip. I picked a property that had multifamily or multi-generational aspects to it. And the difference between multifamily and multi-generational is the permitting and the interior entrance for Hawaii purposes, at least. But I picked something with multi-generational appeal to where, there's the ability to rent some rooms in the house and there's space. And, if there's a family that comes in and buys it, then they can have family downstairs, they got family upstairs, it's able to fit things like that. So there's a lot of flexibility with a home like this, and it creates that desirability and the demand. Everything's about supply and demand, right? So yeah, that's one, instead of focusing on how it makes sense monthly, people are like, oh, rates are bad, this sucks. Well, there's a lot of benefits to buying with a higher rate.
I believe so too. There's a lot. That's one thing. And another is sellers, they want to sell. They want to sell. So when you do ask for those concessions and those credits for seller to, allow you to use it towards your closing costs or pay off your debt, they're willing to do that because they know not a lot of offers are on the table. Where, if interest rate were down, then there's a lot more competition. There's a lot more options for the seller. They can say, you know what, I'm not going to use you because I'm not going to accept your offer because you need money for closing costs. But I think this is the biggest opportunity for people who don't have a lot of money for closing costs. Why? Because we can now negotiate. I mean, we've been doing this, but it's easier for your team to negotiate on your behalf for the seller to give you concessions and credits so you can pay off those debts. You can use it towards your closing costs. So it is a good market too if you have that different aspect to it.
Yeah, that's huge. My first deal coming into the industry, my buyer had to come in with $50,000 appraisal gap. It was right towards the end of the COVID market. It was kind of like as rates began to start to climb. So she still got a good interest rate, but she had to come in with an appraisal gap. And that's the thing that you don't have to deal with now. Instead of paying an appraisal gap up front, whatever, $25,000 or $50,000, you know, I've had buyers get a couple $1,000s back. Like I know Leeroy said earlier, he had those buyers that got money back on closing. And I've had buyers that got money back on closing. They got their earnest money back, and then they got their, the extra from what was left over, whatever the balance was, they received more money back. Like they literally got paid to buy a house. It was
Yeah.
nuts. Like getting paid. Let me get paid to buy a house. I need a place to live anyway. All that, I wrap it up. I always wrap it up and I say, it doesn't matter so much when you buy. Like you can buy the house with a 2% rate, you can buy the house with a 5% rate, 7% rate, whatever. If you really look at the historical trends, every 10 years, there's a drastic market shift. It's not exactly 10 years on the dot, like 90, 2010, 20, but if you look at those 10-year time frames, typically there's some sort of big change in the market. So what matters more is when you actually go to sell and you make the moves to get rid of the property, right? You don't want to panic when you're going to sell a home. You don't want to sell just because rates are up and prices are down. That's the last time you want to sell. That's when you hold, especially if it's making sense and it's breaking even for you. If you panic sell, that's when you lose money. It's kind of like being in the stocks into, if you're in a bad market, you bought when it was, $15 a share. Then it drops to $10 a share. You don't want to sell then unless there's a reason to, and it's like going out of business. But, you know, by all accounts, if the economy as a whole is down and that stock is down because the economy is down, that's not when you sell unless you need tax write-offs. You sell after it goes back up, you hold out. So, you don't lose money until you sell in terms of equity, at least. So all that to say, it's always a good time to buy if you make the right decision, if you make the right plan and you have something to go through with. So I think the last thing that people get wrong, and it kind of ties into that, is just not starting to begin with. People, they kind of second guess themselves. They're not sure. They don't pick the right people to help them plan, and they just don't start. Have you ever seen that?
Yeah. People are just, scared. I was one of them. I didn't do it for 15 years.
What about here's a scenario, and I see this a lot. Buyers that think their credit's too low or their credit's not good. It almost feels like they feel like they can never get into it, right? What would you say to that?
I would say if you're a buyer, you have a bad credit score, and you don't think it's possible, it is. It is. If you create a plan to fix your credit score, it'll get fixed. If something is important enough for you to fix or to work on, you'll get it done. Now, don't mean to be philosophical there, but with the VA loan, there are lenders that can lend on credit score that are lower than the average credit score that they're looking for. With that being said, you might be paying a higher interest rate, but there's also, I didn't know this, but there are also lenders out there that will lend even if you have a bad credit score. You just got to find those guys and gals. They're out there. That's why it's important to link up with realtors like Ryan and myself, because we have those connections. We know those people. And if it doesn't make sense, again, we're going to talk about it. Hey, no, it doesn't make sense for you. Here's the path for you moving forward. Because you are here right now, you can do 1, 2, 3, so you can get to where you need to be in the next 6 months, 12 months, then we can reconvene. And most of the time, for example, I met this young soldier last year and his credit was at like 5 something. I'm not going to put his business out there, but it was in the fives. 12 months later, because we talked about what he needs to be. Again, I'm not a financial advisor. I'm not a credit repair guy, but I'm talking about experience. I used to have bad credit and I did things to make it better. So I just kind of share the things that I did with him. And 12 months later, he's not a homeowner. He went from 5 something to like 690 in 12 months. Fixed his credit, pay off some debts. He was at a good space. It took discipline, planning, and he got to become a homeowner using his VA loan.
I love that. Dude, that's awesome. And I think that what I would drive home is that remember there's no credit requirement by the VA
Yeah.
to use the
Yeah.
VA loan. There's going to be somebody out there, like Leroy said, if you catch yourself kind of confused about this concept of credit, right? On one hand, we're like, well, we're talking about if you have bad credit, what do you do? But then on the other hand, it's like, well, the VA says I don't have to have any I don't need a credit requirement. Just remember, it's not so much the VA, right? It's those lender overlays that we talked about earlier that's really driving that. So with that being said, there's going to be people out there that are willing to take the risk and give out that loan. It's in their business model. That's how different lenders do business. Find yourself again probably through a realtor, a good mortgage broker that maybe retail's got some too, but some sort of good loan officer that is going to be able to find those for you. But in any case, even if they can't, even if there's not a lender out there that is willing to lend on your scenario, don't be afraid to make those loan officers work for you too. If you're serious about making this happen, don't be shy, don't be embarrassed. Ask them for the way ahead. Most good loan officers that I've worked with, they have some sort of credit repair insight or professionals that they'll refer you to or help you out with to help you get to the point that you need to be. And they're going to make money off of you either way. So put them to work, ask them for the way ahead, and they're going to tell you different things. Like, don't just go full steam ahead thinking like, if I do this, this, and this, I'm going to be good. That's going to end up where you end up selling a car and then buying a cheaper car, but you just took out a new loan and didn't realize you just screwed yourself for the next however long. Right. So talk to that loan officer, and it's going back to building that team and doing NDMP and making that plan, take that insight from those subject matter experts and apply it so that you can reach your goals in a timely manner and, in the manner that you want to reach your goals. So yeah, that's the downsides. That's the downsides. And I think next we can go into really what makes a VA buyer stronger than conventional buyers. We're going to go ahead and get to that one. But again, if you're finding value in this video, click like, click subscribe, comment, whatever you're feeling. Like if you got questions, you want to comment, connected with us directly, we're more than happy to help with you and your different circumstances and help you through what you're thinking through. We've got tons of resources, tons of knowledge. If you're in Texas, Leeroy's got you. You're coming to Hawaii, I got you. If you're going anywhere else, we both got you. We can connect you with somebody. So reach out to us. Our socials are there. We're going to have ways to connect. So with that being said, strength of buyers. Why do you think, Leeroy? I've got my thoughts on it, of course, but I want to hear yours first. What makes a VA buyer stronger than a conventional buyer?
Like if I was a seller and I'm looking at contracts or
Yeah. Yeah. That's a perfect scenario.
well, dang.
There's a lot. Where do you
I
start,
mean,
right?
yeah,
So for me, I could kick it off, honestly. Like I have
yeah.
strong feelings towards it. Overall, it goes back to what you said earlier, right? Like you already kind of touched on some of the stuff, just the ability to close. There's no contingencies, no nothing. There's no contingencies on a zero down loan. And a lot of conventional buyers, some way, shape, or form, they're pulling out of investments, they're pulling out of this, they're pulling out of that. There's a contingent sale. I think I've had more contingent purchases with conventional buyers than I've had with VA buyers. The VA buyers, you're ready to go. There's no nothing that you have to wait on. You're just, hey, you're approved for the loan. It doesn't change. The income doesn't change. The income is guaranteed. You can't just get laid off tomorrow like a lot of conventional buyers can, right? Like a lot of them can, they can get fired pretty easy. Military, it ain't that easy to get fired from the military. Maybe you got to try. I don't know, but
You get
it's
in
pretty
trouble
tough.
and get some spanking on the hand, but that's about it. Nah.
Yeah. And even if you do get fired from the military, it's going to take forever to get out too. You're going to be sitting there for a minute. So
No, but yeah, like there's a lot that goes into it. If I was a seller, but then again, I'm a little bit biased, I would probably pick a VA loan over a conventional loan, even if the conventional loan has a lot more down payment on it, has a lot more skin in it. Because I feel like lend or veterans and soldiers, they just want to become homeowner. They just need a house to house their families. That's one thing that I would say. And it's a really easy loan product to work on, especially if the lenders know what they're doing. It's one of the easy ones that they work on. It's pretty easy on their side. At least that's what they say. I'm not a lender, so I wouldn't really dive into that. And it's easy for us to get approved too. Like we talked about debt to income ratio. Most lenders, they can lend up to like 50% and you can still get approved, right? Am I saying something crazy here?
mm-mm.
Yeah, yeah. So
Not crazy at all.
yeah, it's an easier approval process and it's an easier closing timeline.
Yeah, exactly. That's huge. And I think you hit the nail on the head with one of those comments of, you know, the VA buyers, especially active duty, right? Like, we're not playing games. When we're
Yeah,
moving and we're bringing our families, we're bringing our life to
yeah,
whatever our next duty station is, we're not just haphazardly looking for a house. We're on a time frame, right? Like, we're on a time frame to get in the home. We're on a time frame for the orders, and then we're going to be out. So if we're screwing around during the contract, and this is some of the value that your realtor needs to convey to the selling agent, we're not here to screw around. We're here to get into our home. We're going to live here for X amount of time, 2, 3 years. And then we need the flexibility to sell it or rent it out, one of the two. So, the decision that we make, if we wait, if we're screwing around and we wait a year, we might be screwing our own exit plan, right? We might be screwing our way to get out of the home if we wait too long to buy a home. We might not be
exactly.
building enough equity to cover those closing costs in the back end if we have to sell, things like that. That's just the seriousness of us actually in military getting into the home is huge. It's a huge selling point and big strength in choosing a VA buyer. So
Yes,
that's,
sir.
yeah, I think that's highly underrated in just about every market. Would the strength of the VA buyer, I think that cash is king is one of those phrases that gets tossed around, and that's great and wonderful and all, but to be honest, it's great for different markets. It's great because cash talks. It's great because you don't need contingencies. A lot of different things kind of get waived as there's more cash that comes into the picture. But at the end of the day, those are also the people with, the ability to screw around. Those are the people with the ability to negotiate during the contract because they know that they don't need to get into the house, right? So if you want a straightforward process, typically the VA buyer is the way to go. And there's opportunities still. It's not to say that VA buyers can't negotiate, obviously, in a contract. There's going to be opportunities to do so. But overall, man, it's, we're down the business. We're going to typically, I'll offer upfront what we think it's worth. If we think it's worth lower, we'll offer lower. If we need credits, we'll offer a shit ton of credits. Something comes up in J1, hey, we're still going to ask for it. But at the end of the day, we're not screwing around and we're not just doing it to create leverage because we know that we're in a screw you position.
By the way, people, for those of you who don't know what J1 is, for us in Texas, that is the option period.
It's a good call. Yeah, that home inspection is important. Super important. We'll get into that in future videos. We'll talk more about some of the stuff that you should be looking for in home inspections. But thank you for clarifying that because I forget a lot of times, kind of like talking about MDMP. People that don't know, it doesn't matter because people watching this video that don't know what MDMP is, they probably don't need to know what it is. But it's one of those things. If I'm talking to a civilian, I say MDMP, it's like, oh, whoops,
Yes,
I forget.
sir. But yeah, man, you hit it on the nail. Let's go. What's our next topic? Guys, we are on a roll.
Dude,
Dude, you have been dropping some nuggets here, dude.
there's so much. I mean, there's just so much to talk about with the VA loan. Like it's incredible how much detail. And this only skims the surface too. It's not like this is like obviously the entire process and how to navigate it. This is like the high points of what we need to know, but then each of these high points goes in further detail, further detail, further detail. And just the
We're
knowledge
gonna
that
have to
the two of us have accumulated is yeah,
we're
we'll
gonna
we'll
have
dig
to
into
just
all these.
yeah, we're gonna have to do one of these videos and break down each section. Just
Yeah.
give
I
it to
love it.
them.
I love it. I think we go into a second short video for the last two topics. The top
Okay.
5 things veterans should ask the real estate agent, and the one thing every veteran should do before using the VA loan. Those are the kind of like the last two things that we were going to talk about. But for the sake of time, let's go ahead and we'll cut it off. We'll make this a second video. So if you're watching out there, you got some value, you're still watching to this point, and you're looking forward to some of the stuff that we have to say and dig into, subscribe to our channel, follow the videos that we're pushing out. We're just about to get rolling and we're just going to drop all this knowledge for VA buyers. We're both passionate about serving the community, the veteran community. We want to help anybody that wants to be helped. This generational wealth and this wealth building, it's this, great concept that people toss around. But if you really want to learn how to do it, get in touch with Leeroy or myself. And depending on where you're going, we can definitely help you out. We can help you find the right people, or we can get with you in our markets if you're looking to buy a home in one of our markets. So That being said, you got anything to close out with, Leroy?
That is it, man. Again, like Brian said, if you guys want to learn more about the VA loan, how powerful it is, what are the steps that you need before you actually buy a house, we're going to break it down to you with you guys. You can contact us on our social media, set up a one-on-one meeting. We're more than happy to hop on there and give you guys a little bit of insight on how to use your VA loan. And I hope this video is a blessing to you and your friends. Share it, like it, do all the social media stuff that you guys do on social media. Have a blessed day, guys.
Beautiful.
And God bless.
Our contact's going to be in the description. So go down to that description, go look for our contact. And if there's something specific you want to hear about from us, drop it in the comments. We'll make a video on it. All right. Aloha,
Okay,
guys.
We're good? All right, bro.